InvestSMART separately managed account benefit number 7. It's not a pooled investment. Pooled investments like managed funds can disadvantage the long-term investor who is happy to ride out the volatility of the market. Managed fund investors' performance can be negatively impacted by herd mentality of people putting cash into and taking it out of the market at the wrong time. In a separately managed account, there is no herd, just you.
Hello, I'm Tony Kaye. I'm the editor of Eureka Report. Welcome to Property Point. I'm joined as always by Nerida Conisbee, Chief Economist of REA Group.
Hi, how are you?
Welcome, Nerida. Thanks for coming in. Nerida, the recent budget, we had some initiatives there to do with investment, particularly foreign investors. There are a couple of measures that the government's brought in, so I wonder if we could chat about that today, what sort of impact that's likely to have.
Absolutely.
So one of the measures was around foreign investors having to rent out any investment property they have for at least 6 months, I believe, and to get around penalties.
Yeah, look, I mean, I don't know the extent of that problem. I mean, it's interesting that there is a perception that there are a lot of empty apartments in places like Melbourne and Brisbane. I don't know how they're going to police it. I think it'll be a very difficult one in terms of trying to work out who's not staying in their apartments for over a prolonged period of time. The other issue, though, is that people that are keeping apartments vacant are already forgoing a decent amount of rental income. So, whether they would find this tax an incentive to lease their property out more frequently, I don't know. But, I do think I really question the extent of the problem.
Yeah, I agree with you there, actually. It's going to be very hard to police. You don't really know if, an investor is using the property or not using the property.
No, and then people will look at ways to get around it. I mean, there's no doubt that, that maybe they'll track water usage or electricity, but, there's ways of dealing with that. So, it will be a tough one. I think it was interesting, though, looking at how much revenue they expected to raise from it, and it was relatively low. So it may be more of a political move as opposed to, a financial decision for them.
Do you think that'll be enough to scare foreign investors off?
No, I don't think so. Look, it's interesting. I mean, you do have to be careful with how foreign investors are handled. And, I don't blame the government for trying to tap into the amount of foreign investment coming in. That, it's naive to think that this level of foreign investment could potentially go on forever. I mean, it's probably going to go for a while, but it won't go forever. So you may as well get some sort of revenue from it. But you do need to move carefully. And, when we look on site, when new taxes are introduced on foreign buyers, there's no doubt that they do drop off in the months following a new decision. And, the taxes introduced last year by Queensland, New South Wales and Victoria to raise revenue from foreign buyers did lead to a drop-off in those cities. So you need to move carefully. I think, in places like Melbourne now, we've got all this supply coming through. We've got stamp duty changes. It's all those little things that are really chipping away on demand. And, you don't want to push it too far so that the market starts to really tumble. Yeah,
they've got to be fairly careful. And then you've got the measures being taken by APRA, to curtail investment lending. So there's various moving parts which the government and the regulators have got to be fairly careful about.
Yeah, and look, they have to be careful. And I think the other point too is that when you have a look at foreign buyers and the role they've played in increasing housing supply in Australia, it's been massive. I mean, all those apartment projects across capital cities, a lot of them wouldn't have got up and running if we didn't have foreign money coming in. So, when people talk about foreign buyers, they often talk about them taking homes for Australians, but in many ways they're really creating homes for Australians. And, we do need to be careful with the way that we handle them.
Yeah. So what's your data showing in terms of, hits to the site from offshore?
So if we have a look at where foreign buyers are looking, Melbourne is the number one destination. We see twice as many visitors from overseas looking at, property seekers from overseas looking at Melbourne than number 2, which is Sydney. And what it comes down to is levels of supply. If you have a look at the amount of development taking place in Melbourne, it's a majority, it'll probably make up a huge proportion of the national level of new supply. Yeah. If we have a look in Sydney, Sydney's finally seeing high levels of supply, but it's come after decades of very little supply. So, that property is getting snapped up quickly, and Melbourne in comparison is looking as a good option.
And one of the other measures that we saw out of the budget is that the government, from budget night actually, has said that property investors won't be able to go and visit their property, or they won't be able to deduct the costs of visiting their property if it's in an interstate location, which was interesting. I can see that may have been abused by some investors, and I've seen a little bit of commentary around the Gold Coast in particular.
Yeah, I mean, I'd imagine Gold Coast would be impacted. I mean, I think it is open for abuse, and I think that's probably what they were looking at when they changed the rule. But, you know, if you've got a good property manager, you know, why are you having to make so many frequent trips to your property to inspect it? You know, so I think that's the other point too, that, you know, great property managers make sure that they look after your property. So
I was thinking that myself. I mean, if you've got a property manager, there's really not a lot of need for the investor to go up and do the walkthrough of the property and, you know, the things that the property manager would normally do.
Absolutely. I mean, the thing too with looking at investors, that the budget did provide a lot of certainty for them, and I think you know, ultimately as an investor, whether a huge investor or a small investor, certainty is what you're after. So the government's moving carefully on changes there. I think things like negative gearing, or negative gearing in particular, is being blamed for housing affordability by a lot of people. So, you know, they're moving carefully. They made changes, I guess, to appease that audience, but, you know, they are moving pretty carefully with the way they handle it.
Yeah. So do you really think that will affect where investors choose to buy a property, or not really?
Oh, maybe some, you know. I guess if you're, again, using it as an excuse to go up to the Gold Coast a lot, maybe. But, you know, if you believe in the Gold Coast, and I think Gold Coast is a great place to invest at the moment. It's doing really well. You know, hopefully it won't make much of a difference long term. But, you know, it certainly will affect some buyers that were, you know, wanting to make a lot of trips to the Gold Coast and use it as a tax deduction.
Just talking about the market generally, we've seen it calling off just a little bit of late. Do you think that's a definite trend, or is it too early to tell?
We think it's too early to tell. It was interesting when we had a look at demand on our site, it dropped in April. So as expected, all the media and the moves by APRA, you know, the banks moving independently of the Reserve Bank, all those things are starting to cut in. But a similar thing happened last December. So November we hit a peak on our site in terms of demand. Banks started raising rates, we saw a drop off, but everyone sort of piled back into the market in January. Hit another peak in February, another peak in March. So, you know, there's still this very high level of demand. I mean, demand levels are still higher than they were at any time last year. So, you know, whether we're at the peak, I don't know. I'll have to wait a couple more months to form a stronger view. I mean, banks, you know, the banks are coming out. Citi and UBS have both come out and said this is probably it. And, you know, reading their analysis, it all makes sense. You know, it should start to slow now, but whether people will actually behave the way that we expect is still uncertain. So I think it's still a little bit too early to tell.
Yeah, I think it's hard to make the call just yet. There's not a lot of stock on the market, I don't think, anyway. You know, and that's, you know, impacting the figures, I guess.
Absolutely. I mean, and when you look at any time when you see lots of stock flood the market, it tends to be really bad economic events, particularly job loss. And at the moment in New South Wales and Victoria, jobs are still growing. You know, prices are getting very expensive, and the level of indebtedness by people in those states is no doubt rising, particularly for young people. So that's a problem, and I think it does need to be resolved. But, you know, I think the best outcome would be for the market to slow. And, you know, at the moment, first month post all these moves by APRA and the banks and the like, the market slowed in April. You know, whether it will continue remains to be seen.
Oh, well, thanks very much for coming in, Nerida.
Thanks for having me.
Always good to have you. I'm Tony Calm, the editor of Eureka Report. Please join us again next time for Property Point.